Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the New Zealand versus US dollar. Today's date is February 15, 2024. Let's get started. I'm looking at the 4-hour chart in this currency pair. And, I spread it out a little bit because I wanted to take a broader look at what's been going on here. And if you take a look at this range right through here, lots of ups and downs. You can see all the choppy action in the price with a low price that came in at 0.60369. That was during last week's trading, and a high price that came in 2 weeks ago at 0.6173. If you take the difference between that, which is about 40 to 70, it's about 130 pips. And it encompasses a period of 1, 2, 3, 4. We're in the 5th week here of this up and down price action. So that's a long time with a range that's relatively narrow of only 130 pips. So that's one thing to note. The other thing to note is you see the 50% midpoint of that move to the upside. I'm going to put a horizontal line at that 50% retracement if I could. Here we go, right here. And you can see that 50% midpoint is just below this green line right here and this blue line right here. These are two moving averages that are moving closer and closer together. The green line represents the 200-day moving average. The blue line represents the 100-day moving average. That's these two levels right here. So we have this cluster of the 50% retracement, the 100-day moving average, the 200-day moving average, all within maybe about 20 or so pips over here, which is very tight and also a neutral area. It's again the 50%. That's the midpoint. It's the 100 and 200-day moving average. That's a long time period to have those two moving averages start to converge. And when that happens, the market tends to look for a move away. Okay, we're going to move away either to the upside or to the downside because it's just the market is too converged. It's stayed in the same place for too long. So it's time to make a move. And what have we done today? And now I'm going to start to look a little bit more closely just to give you a little better view here. And if we look at the price action today, what we did in trading today was we did base against this 200-day moving average. Remember, that's a high of this 50% 100-day, 200-day moving average level. And we did it on a number of different bars over the last 2 trading days before the market started to move to the upside, helped by that retail sales in the U.S. We're also moving above the 100-bar moving average on the 4-hour chart. That level comes in around the 61 level, 0.61, nice round number. It's really at 0.6105, but you can see the price has dipped a little bit below each of those levels over the last 2 bars. So we probably found support near the 61 level, and we're seeing a rotation to the upside. We're currently trading at 0.6113, about 13, 14 pips above that 61 level. In the short term, from a trading perspective, I would say, well, as long as we stay above the 61 level, the bias remains more to the upside. We're above the 100 and 200-day moving average. We're above the 50% retracement. We're above the 100-bar moving average on the 4-hour chart. All those are more bullish biases here for the New Zealand versus US dollar, and we can expect the price to move higher. If we move back below the 100-bar moving average, maybe all the bets are off and we start to look back toward, or some of the bets are off, or some of the conviction is off, or some of the confidence is off. And we might expect that we could possibly head back down to retest this area right here, and we could even break below that level and start to move to the downside. But what we're looking for is some movement, okay? Because the market's been doing in this consolidation for a long time, so we're looking for some movement. So let's stay above the 100-bar moving average here on the 4-hour chart, and we'll see what happens. On the top side, we do need to get above this top side trend line right here, connecting these 2 points. Also, the 200-bar moving average on the 4-hour chart is right near that level, and the 38.2% retracement, might as well add that to it. So these are the next targets on the top side to get to and through. Then we have this swing area up to 0.6159, and then we have the high price that has encompassed the price over this time period right here to get to and through. If we get above all of those levels, I'll put a box here rather than that arrow. Get above all those levels, that would get the price out of this box and have the price moving more to the upside. So that's my look at the New Zealand versus US dollar. The buyers are making a play. I showed you why. I told you the risks. We'll see what happens. I don't know if it's going to continue its move to the upside or move to the downside. What I do know is my risk, and that's important for all traders. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.